So I know it's been a wild week in the stock market with all the news with GameStop, AMC, and also the Wall Street Bets Reddit group and them trying to compete with the hedge fund. It's just been all over the place. But I just wanted to make this video to showcase to you guys on how to stay your course and don't get distracted by all these little gold mines that are trying to, I don't know, lure you in, because sometimes you win. It could be great. You could deposit $1,000 into a stock and all of a sudden you're up six figures. That does happen, but I think it's just important to not get caught off guard and just start jumping from here to here to here, because then you'll just get all out of place. So I made this video to tell you guys about my investment portfolio and how I'm still sticking to my course and what that consists of. So before I get into my breakdown, I wanted to explain to you about the S&P 500 and why a portion of my investment portfolio goes towards the S&P 500. So pretty much the S&P 500 is built of 500 companies, large cap companies that are doing really well in America pretty much. And it's broken down into 11 different sectors. So I want to go through those 11 different sectors so you get a better idea of what they are. So here you can see the 11 different sectors that it's broken down to. So we have communication, that's like your AT&T and Verizon companies. You also have consumer discretionary, which is Nike and Starbucks, and you also have consumer staples, which is like Coca-Cola. You have your energy, which is like your Exxon Mobil. You also have your healthcare, which is like United Health, and you also have your financials, which is like JP Morgan and Bank of America. And some of these sectors are really straight to the point, but then you also have others that are like materials and industrials that may get a little confusing. Industrials is like your airplanes, like your Boeing, American Airlines, and things like that. And also materials is like your mining and metals like gold, silver, companies that provide those type of things. And the last three we have here are the real estate, which is like Simon Property Group. If you go to the outlets and shop often, you may have seen this sign everywhere. They pretty much own those type of buildings. And also you have your technology, which is Apple, IBM, and your utilities, which is pretty much electric companies. So each of these sectors are weighted differently. We have the top three, which are technology, financials, and consumer discretionary. Technology is number one, which makes the most sense because that's where the world is pretty much headed, and it's been doing really well for the past few years, and it's been outperforming all the other sectors. And we'll get into that too, so we can see how each has performed the past 15 years. So this graph is a really good representation about how each sector has performed the past 15 years. And as you can see, technology has pretty much surpassed all sectors on a high level at over 600% return if you invested back in 2005. In the pink color is where you can see how the S&P 500 performed against each sector, and it's right above the middle. So that makes sense because, as I said before, it has a high percentage of technology within it. So that's why it would have the extra leverage over the other funds, or other sectors, I should say. So another great thing to point out is that if you bought an energy sector type of fund that includes all the energy companies only, that you still would have made over 50% return on your money for the past 15 years, which isn't bad, which is why I like the S&P 500. I like buying index funds that particularly track the S&P 500. Okay, so I wanted to explain all of that so I can bring you here to tell you about my investment portfolio and how I break it down in a very simple way. So pretty much I have my index funds that I explained to you guys before, and those are mainly technology index funds that pretty much follow the S&P 500. So they've been doing really well. I've earned like 20 to 30% last year on them, which is really good. Typically, like I said, you only earn 10 to 12% on average, but to earn 20 to almost 30% on them was really good for me. And I expect almost the same return, if not better, this year. So 85% of my investment portfolio pretty much goes towards the S&P 500 or index funds that track the S&P 500. And the remainder 15%, as I said before, cannabis and clean energy. And that is where I feel like the world is going, even more so on a greater scale. So I think that'll be very beneficial to diversify my portfolio a little bit. I thought this video was very important to make, especially for this week, because it's been, like I said before, so much going on. And I just wanted to tell you guys to just stay focused on what your plan of action is. And if your plan of action was to get in on the action, then go head for it. But if you had a different state of mind, don't get distracted by all of the hype, because literally there's a million stocks out there. I don't know exactly the number, but there's a ton out there. And you're just, every day one's gonna pop, every day one's gonna pop. And it's literally like the lotto and like gambling pretty much in some instance. So you just want to be careful, and that's why I wanted to share with you guys my investment portfolio. I have a think conservative, but yet I kind of risky because I'm in the technology so heavy, so you just never know. But yeah, I'll keep you guys posted. But thank you for watching, and until next time, don't forget to like, share, comment, and subscribe below, and bye.